Yes guys, good morning guys. There is analysis I did here very early in the morning, and I just want us to go through it. This one here I did, and as I said earlier, I always do top down analysis I call it. These are top down analysis. First of all, you start from a higher time frame, then to go to a lower time frame, then you execute a trade. You open a signal. So this is what I did, as you can see. So let's just start from let's just start from a 30-minute time frame. So as you can see, uh, these are a GBP, AUD, AUD, GBP, AUD. So as you can see, market moved from this point. From this point, it moves up to around this point. Then as you can see, it's like this a reversal. Market reversed around this place, then again it did what? It went up again, and you can see this massive move. So I opened a signal around this place. Now I want to explain the reason as to why I did this. So look at this. We have what we call an order block. An order block. So for an order block to be valid, there must be some things we need to put into consideration first. There must be some qualifications for it to be valid. So first, I came here and I look at around this place, and as you can see, there's an order block around this place because there is a move. There's a massive move after this. You can see this candlestick. I don't know how we call it, but we have this candlestick around this place. So this is an order block around this place. This is an oblique because this is a candlestick which causes the move, the break of this swing high, the break of this higher high. This one. What causes this one is, I think, is this candlestick around this place. So I marked this one. I marked this candlestick here, and this was my order block. So let's see. So I marked this small candlestick. I marked the entire candlestick like this. Then here, mark the entire candlestick like this. So in the future, I knew market will do what? Will come back and fill the gap. There's a fair value gap. Let's go back a bit. There is a fair value gap which was left around this place, which market would just come back and do what? And refill this fair value gap. As you can see, this is a fair value gap. For an order block to be valid, there must be a fair value gap. You see, this is a fair value gap. So, and again, there must be a sweep. There must be a sweep of liquidity around that. There must be a sweep of liquidity. So markets must gain a liquidity, then there's a sweep. So this is the candlestick which did what? Which sweep away the liquidity which was resting around this place. So this is the candlestick. Then after that, we can see there is what? There's a fair value gap. So market will just come back again to do what? To mitigate this order block here, or to fill this one. So we have two entry points. So it's this one or this one. So let us mark these our entry points. And let's just mark this entry point. That we have two entry points around that place. So one, we have there's a fair value gap. So there, let us see. This was another entry. There's another entry point. There's an entry point there. So there's our first entry point. Then you have second entry point at this place. So your stop loss, our stop loss, we are supposed to place it. I've not yet set my stop loss, but I must do so. It's very important to set your stop loss. So stop loss is supposed to be at below this order block here. You place our stop loss around this place. So after this, you have to be patient and wait for market to come back and mitigate this order block. You wait for market to come back and mitigate this order block. On my earlier video, I explained on market structure, how market was breaking the break of structure. I did explain that break of structure, break of structure, break of structure, break of structure, break of structure. Yes, I explained that one. So right now, I'm just explaining on how I use this order block to do what? To open a signal. So after market came back to mitigate this order block here, what do we do? We go back to a lower time frame. So I went back direct to, so from 30 minutes I just decided to go back to a 1 minute time frame. So let's go back to 1 minute time frame so that I see, because I'm looking for entry. So if you go back to a 1 minute time frame, what do you look at? You look for change of character. If there's any change of character first, to show you that actually market has changed now from downtrend to uptrend. So let us go to a 1 minute time frame so that we see. Good. Now this is our 1 minute time frame, and you can see what is happening around this 1 minute time frame. Now see, we have a break of structure first. Also we have a change of character, and also yes. Also we have a liquidity sweep. We also have a liquidity sweep. So let me show you everything. So this is our order block. As you can see, this is our order block. This one, I think, yes, it is this is our order block, which market on a higher time frame. This is an order block. Then also on another higher time frame, we also have this one. This one was a fair value gap. This was a fair value gap which market need to come back and refill. Now let us study the structure of this chart. Now look at the structure of the chart. Market has been moving from a downtrend now to an uptrend. So if you look at the bottom, the we call this one the how do we call it, demand zone. So we have this one. This one is a break of structure. So these are lower low, lower high. So these are break of structure. Also we have this one also a run. Okay, these are run. So these are pullback. These are run. Then also have this one a pullback, then run. So we also have this one as a break of structure, a run, pullback, also run. So also you can also mark this point here as a break of structure. Then again we have this run, also a pullback, then again break of structure around this place. So as you can see, there is what we call liquidity, which was gained around this place. From this point to this point is a liquidity gain which was gained. Then we wait for liquidity sweep. So this is like something to do with like a double bottom. Then market came back and collect all those stop losses which was resting around this place, and then you can see this one. This is a liquidity sweep. So you wait for this one again. Then market did what? Market reverse. So we can see market move like this. So this is the another swing low. So market failed to break this one here. Market failed to break this and came back up to read out this place. Then we can see this move. So we have this one. This another this a higher. We say let's call this one as a higher high. So market came and break this one and form another higher high. This is an indication that actually market has done what? market has reversed. So we have now confirmed that market is now reversed from a downtrend to an uptrend. Now what do we look for? We are looking for an entry point. So this is a break of structure, so I decided to make my entry around this small because I realized that market is doing what? Market is aggressively moving up, so I decided to open my signal around this place so I can wait for a deeper pullback or this one, but there's no problem. So I decided to open my signal around this place, and you can see market moved. So my stop loss was supposed to be around this place here. Then we collect everything, as you can see. So market is still moving. This is still a uptrend. Market is moving, and my target is around this place. My target is around this place here. So let's see. Let us see our trade. You can see now we are at 179. We are at 179, and it's still moving. Market is still moving. So nowadays I don't do classes, or I don't always do classes, but in case this now, because I do charge nowadays. I'm charging for classes. That is why I don't always give free classes. I'm charging classes. So in case there's anyone who would like to join our classes, so you can just inbox me for classes. We talk, we talk, then we see. Lazima tutaelewana, and that's all. So thank you so much. Thank you. Let's wait for another. Okay, by the way, I'll be doing this kind of analysis, and occasionally, not daily, but occasionally, very early in the morning, maybe at around 5:30, I'll be giving my signals. After doing analysis, I'll be giving my free signals, but only once, maybe in a week or twice a week. I'll be giving my signals random. I'll not give a specific day or date, but I'll just be giving a random, maybe once or two times a day. Thank you so much, guys. Yes.